Welcome to Infotech Lead Videos. Here we have Rohit Sen, CEO and co-founder of Nira Finance, talking about digital payments at IoT India Congress 2017.
I'm co-founder of a company called Nira. We're a fintech startup, and we're one of the startups in the NASCOM 10,000 Startups program. So we're early stage, and that's how we got invited to speak here. Now, I wasn't really given a brief. It was literally, I was approached by being told, hey, you work in financial inclusion, you want to speak at this event. So normally when people think about financial inclusion, it's always about, as today, mostly payments, people having a bank account for the first time, people being able to receive government benefits that we're entitled to. But the big unsolved problem in our mind is credit. People who don't have access to credit. So that's where we're focused. So just a bit of background, as was already introduced. So you can tell from my accent, I'm not from these parts. So before I came to India, I used to work as a trader. So for 12 years, I traded credit, which mainly meant mortgage credit, consumer credit, structured credit, exotic things like that. But sitting in London, which is a major fintech hub, we really got a good view of the developments happening in these new types of technologies. And what was strikingly clear is actually the problems that exist and the sort of solutions that we can create are many magnitudes bigger here in India than what we see in the West. So I quit, and I thought I'm going to come to India and give it a shot. So ultimately, as mentioned, the problem that we're focusing on is access to credit. So in India today, only about 1 in 10 people is able to go to a bank and get a loan. So as everyone gets rejected, they're largely forced to go to friends, family, neighbors, and sometimes money lenders when they need a loan. And as we know, these money lenders charge very high rates of interest, so it leads to quite adverse outcomes for a lot of people. And the reason banks turn away so many people is effectively banks rely on credit scores. So they expect you to have a CIBIL score, you need to have a high CIBIL score to get a loan. And if you don't have that, they'll say, okay, well, give us some collateral. But the problem is most people have neither a credit score nor collateral, and that's why this big informal economy exists. And in fact, the informal economy in India for lending is as big as the formal economy. So it's a big problem. So you could say this graph represents the state of affairs in India today. So if you just say the axis is an income distribution. So at the top we have the richer people, at the bottom we have poorer people. So banks are effectively only catering to that top echelon of society. And then further down, I've also highlighted the sector, microfinance institutions. They also serve a particular cohort lower down. But it's our contention that there are good borrowers across the income distribution. It's simply the case that if you have a lower affordability, you just get a smaller size loan. It's not that you can't have a loan. And another problem that banks have is they have a very heavy cost base. They have a lot of branches, a lot of people. So they can't give loans below a certain size. If you want 5,000 rupees or 10,000 rupees, you can't go to a bank. They will say we need to have a minimum of 1 lakh before it becomes economic for them. So as a startup, it's our job to try and say, well, how do we find these good people in this big unserved population in the middle? And as everyone's been talking about before, the solution is data and technology. So what we can do now is, because we're living in an age where people are creating enormous amounts of data about themselves through their activity on their mobile phone, through their activity online, we can take some of this new types of data being created and combine it with traditional financial data such as your bank statements in a new model. And we put it together and we basically give someone a score. And if someone scores high enough, according to us, we'll say, okay, we can offer you credit. So the key breakthrough then is we can now suddenly score millions of people who previously were invisible to banks. And because we have a much lower cost base, we can also, in an economically profitable way, offer smaller size loans than what banks can do. So our mission then is to help more people get access to credit and at a price that's fair. lower than these money lenders. And as everyone's been talking about already today, the product has to be simple and easy to use. If that happens, then we'll have something that creates value. So, access to credit has been a big problem for many years. Money lenders are prevalent across the whole country, so why is now the right time? This wheel, gives the main facets, but two I want to just dwell upon slightly. So first is this regulatory environment. Normally, whenever you're introducing a new financial product, particularly anything to do with debt, you're always pushing against the regulator. It's an uphill struggle. But here in India, the government, because they have financial inclusion as a key objective, it's actually, they want this to happen. And that leads on to the second point about this infrastructure. We've got a world-class infrastructure through India Stack here, Aadhaar, and that basically has created a platform upon which startups like ourselves can sit on top and create solutions which have policy outcomes from a government perspective, but also economic outcomes, both for society and as a company. Now, let's say the top 10% of people here in India can go to the bank. They don't need us. The group that do need us, or we can address, is the new middle class, the group below them. Now, these are people who are digitally savvy, they're online, they have growing incomes, and they're going to have increasing consumption going forward. But most importantly, from our perspective as a startup, it's a big group today, but it's growing and growing and growing. Within 10 years, there'll be 500 million people that we can address. So it's a big opportunity, which is obviously what we're looking to address. But it's too big for us, actually. As a startup with limited resources, we can't address a market of more than 200 million people because there are simply too many different use cases, persona types, borrower profiles. We have to start somewhere and build from there. So our initial target market is the urban salaried graduate. And it's because they represent the intersection of people with a lot of data. Again, this is what it's all about. A lot of data. They have the willingness to take credit, unlike the older generation, which was the mindset was don't buy it until you've got enough money. They've got their salaries to service this debt. But critically, because they don't have any borrowing history, they've got no credit scores. So they can't go to the bank. And also, because they need small amounts, again, they can't go to the bank, that product doesn't exist. So that's where we start. So our typical customer is someone in their 20s, they're working in they're in the early parts of their career, they're working in corporate, and they're probably earning like 3 to 5 lakhs a year. So the sort of use cases for these sorts of people are consumer durables, in particular mobile phones, laptops. The people who've been working for a few years are more comfortable for something like travel, say buying an airfare, an air ticket, and paying for that on EMI. But one major use case is actually for emergency situations such as medical expenses. That's the time someone falls ill in your family and you need to treat them. That's often when they turn to these money lenders because they're desperate. So to the extent that we have a ready product for them, we can help them in the form of providing a safety net actually to avoid that sort of situation. So the actual product we're giving someone is entirely via their mobile phone. So they apply to us, it's literally a 3-minute application, and we can make a decision straight away. If they qualify, we're giving them a credit limit of up to 1 lakh. So they'll have a pot of money available for them to use at any time, anywhere. So let's say a user has 80,000 rupees, they qualify for that. So one day they're in a shop, they see a mobile phone, they want to buy it, and they want to borrow 20,000 rupees. They simply go to the app and say, I want 20,000. They choose a repayment term of 6 months, say up to 12 months. And we will simply display to them 3 numbers. Your EMI on a monthly basis is X. Your total interest you spend is Y. And your interest rate is Z. If you're satisfied, simply press OK, and the money is instant in their account. They just hand over their debit card and they can buy that product. And as they repay it, so the balance starts at 80,000, they draw 20, it goes down to 60. As they repay, it'll top back up to 80, and they can use it again. Well, in the meantime, if they want to take a second loan, they can. So it's something that they can use over and over again and have it readily available. And how do we make money? Like any lending institution, interest. So to be a lender in India, you have to have a license. As a tech startup, we don't have a license, so we partner with a licensed entity. And because we're lending to people that normally formal institutions don't lend to, we'll have a risk-sharing arrangement. We will take risk as well. And simply, let's say the borrowers charge 25% interest for a loan. So we'll say we'll take funding from a lender at 15, we lend at 25, so we keep 10. From that 10, we have to deduct our operating costs, acquisition costs, credit losses, and what we're left with is our profits. So you can follow us, our progress, all the social media channels as usual.